Good morning. Welcome back to Market Monday. I hope you had a wonderful holiday. And of course, our numbers are going to look a little different this week because we had quite a few days there where a lot of people weren't working or they were having holidays with their family. So this past week, we only had 64 new listings and 20 people that committed to listing their home. So at 83, which is down from about 136 from last week. So definitely down. We expect it to stay down probably pretty much this week too, but then we're expecting the market to change dramatically as we head into spring. So we had 29 homes that did cut back on the market for one reason or another, usually some kind of contingency, failed inspection, appraisal, financing, something like that. We had 113 homes that still did go off the market under contract last week though. So again, 113 off that received offers. We had 223 that closed and we only had 84 that are coming on the market. So this continues to contribute to, as we've talked about week after week, the high demand for houses and the seller market that we are in. You will see we are down to 909 houses in the region with 40 in the coming soon status. So 949 houses available to our buyers. Active and coming soon in Oregon and Point Place. We have 21 in each area. 2 new ones in Oregon last week, 1 new one in Point Place. 1 new coming soon in Oregon, 1 new coming soon in Point Place. 9 went off the market this past week in Oregon. It's kind of funny because last week it was Point Place that was super, super busy. This week it was Oregon that was super busy with 9 going off the market. 4 off the market in Point Place and 4 that sold and closed in Oregon and 3 that sold and closed in Point Place. So as you can see from these numbers, we definitely need some more houses. They do continue to sell very quickly. We do continue to be in the seller's market. So November stats are in. We were up 5.6% over November of 2020 for a total of 948 homes sold. And again, we've been talking about the number of new listings. We only had 860 in November. That number is actually down from October. We had 1,038 new listings. So that's a big difference from month to month. And this number is probably going to be about the same or maybe a little bit lower in December when we get our statistics in. So these numbers continue to drive us in this complete seller's market that we have. The one thing, 2 things actually that are a little interesting though. November, the average sales price dropped to $192,559. That was down from $196,834 in October. So down about $4,000 on the average sales price. And the number of days on the market went up a little bit to 63. So prices are stabilizing a little bit, not quite as competitive as we had saw in the spring and the summer markets when it was super, super crazy. But so let's talk about where we're headed and what's happening. So one thing, if you are interested in one of my winter buyer or seller guides, I have digital copies that I can just email you. Just text your email address to 419-356-0276 or check on my RE/MAX Preferred Facebook page and you can get a copy of the seller guides and the buyer guides for winter this year. Normally what we do see is that the spring market is the highest number of listings that we do have usually come on a market. It's very seasonal. So, but we are expecting this winter to be an extremely high number of new listings coming on the market. People are in positions at this point to sell their homes. They have equity with the rising prices. They are no longer underwater. And so we have many people that are starting right now to talk to their real estate agents to get their homes on the market in the winter. They are serious about selling. They're serious about moving and making changes in their life. And we have many buyers that are, the buyers actually that are out here right now are super serious also. They would not be out traipsing around in the snow if they were not looking to buy a home this winter. We've been talking all year about the seller's market. So you can see today that our numbers are way down. So if you look here in 2010, that's the last time we had a buyer's market. That number of inventory, the number of houses that we've had available has continued to bottom out until you see us right here today. And this is part of what's driving this seller's market, is that there is not enough inventory in the market for the number of buyers that we have. So let's talk a little bit about the interest rates, because this makes a huge difference for our buyers. This is kind of a historical perspective on today's mortgage rates. So you can see back in 2018, they were up in the, almost 5% right here. And so this I'm sharing with you just because the pandemic has caused some changes in what we would traditionally see. As you can see in 2020, what happened historically, you can see the mortgage rates bottomed out right there, December of 2020, and they were way down in the twos. So middle twos, sometimes we even saw in the low twos here in Northwest Ohio. But you can see right here, from the beginning of 2021, these numbers have continued to peak. They went up to about 3.2%. Back in March, and then they kind of dipped down over the summer again, which was super cool for our buyers. So, and then it has started to rise again. So they are talking in 2022 that interest rates are going to go up. And what this means to you as a buyer is if these interest rates go back up, and they're thinking they might go back up to these pre-pandemic rates, somewhere around 5%, what that means is that 1% of interest rate equals about $12,000 worth of buying power on every $100,000 worth of mortgage. So if you're purchasing a $300,000 house, interest rates go up 1%. That's a difference in your buying power of $36,000. So while people currently have some concerns about purchasing right now, please don't, because if you're selling or if you're buying, but if you're selling especially, you're going to get the highest amount of money for your home that we've ever had in history. These are going to be the highest sales rates. And then you're going to turn around and buy as a buyer with the interest rates at the lowest interest rates. So you are actually kind of in a win-win situation as a seller and as a buyer. And so you can see this is some of the projections. So fourth quarter of 2021, we're sitting about 3.2%. They're suggesting that in January, we're going to be around 3.4. By February, we're going to be 3.5. And by March, we're going to be somewhere around 3.6. So from there, you'll see that Freddie Mac, Fannie Mae, MBA, NAR, all of them are predicting anywhere up into the 4% by the fourth quarter of 2022. And we've heard actually some predictions of up to all the way 5%. So that's an additional 1 or 2% of interest rate on the housing, on your mortgage, which causes that difference in the buying power of like $12,000 on every 100,000. So keep that in mind. What is going to happen with the housing market? So just real quick to talk about that, we're expecting that we are going to have another strong year. This is from Mike, from the chief economist and senior vice president of MBA, Mortgage Bankers Association. They are thinking that it's going to be another strong year. You can see here that our home forecast, 6.5 million homes sold in 2020. So that's a lot of houses. That is way up. We've had an exceptionally good 2021 and a 2020 year. But they are projecting that 2022 is going to be above average also. So you can see here projections anywhere from 6.6 million to 7.5 million. Depends who's talking, Freddie, Fannie, NAR, MBA. But again, this should be the third year in a row that we're going to have very high home sales. So if you are thinking about selling your home, it's a great time to be in the market. They are expecting home appreciation to slow down We've had such rapid home appreciation the last couple of years, between 8 and 13%. We are expecting somewhere between 2.8, depending on who you listen to 7.4 in 2022. But the average house appreciation in 2022 is most likely going to be somewhere around 5%, which puts us back closer to a more normal market. Normal home appreciation when you invest in real estate is somewhere between 3 and 5%. And so the average of all those estimates was about 5.1. So we're going to start to see some normalization, I think. We are going to start to see more listings coming on the market, interest rates going up. And so it's going to be a fun, interesting, exciting year for real estate. And I just want to wish you happy New Year's today. I hope you have a wonderful celebration this weekend, celebrating going into 2022. We expect it to be a better year for everybody and everything. And may God just bless you. Enjoy yourself. Thanks for joining me each week. I hope you find this information helpful. And I will see you next week, bright and early next Monday morning, 2022. Have a great week. Take care. God bless.